Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. The US retail sales data on Tuesday was an important data markets were tracking to check out the health of the consumption sector of the US economy. Now, while this data led to gold hitting all-time highs, it's important to note that the previous month's data was also revised higher. And we are having important developments on the economic front. Mr. Biden trying to cap rise in rents, UK government's King's speech, where they announced major policy initiatives, and the ongoing Chinese plenums. Good morning, JK. Seems to be a slightly weaker dollar market. Your thoughts on the moves and on the updates recently?
Good morning, Swaraj. Yes, you referred to King's statement in UK Parliament, which is equivalent of our president's speech to both houses of Parliament before the session begins. And whatever policies that he indicated of the new government did not have much of an impact on the UK market. But contrastingly, even with elections 4 months ahead, Trump's statement yesterday actually was a market mover. So if you look at it, Trump actually directly emphasized the issue of currency manipulation by countries like China and Japan during his presidency. And he expressed concern over the impact of a strong dollar on US manufacturers and suggested it could force them to move operations overseas. So this really was a market mover as far as the currencies are concerned. You saw the euro making headway to 1.0950, was holding very well below 1.0920. Then dollar again made a dive to almost 155 after these statements. So really, market is now more and more trying to discount what Trump's policies could be. And the other side, which of his statement about chip industry, or rather the technology and China, actually led to Nasdaq falling nearly 2.7% because all the Chinese companies registered in US Nasdaq had a very bad day. And of course, the ongoing rotation from highly valued tech stocks to the economy stocks are also having an impact. But definitely, it is what Trump is saying is making a lot of impact on the market. So in this context, of course, UK's King statement was much less influential. We also had some Fed members speaking, and these were actually, they were getting more dovishly tilted. But once again, despite the inflation coming closer to their target, they are very restrained in their indication of timing of the rate cuts, and they really want to. They're really saying that they can September or even November is not something that is a foregone conclusion. So markets are really now only discounting for 2 rate cuts starting September, but that is hardly any official seal of approval for it so far. So that is something. But dollar has moved based on the Trump statement, as well as Bank of Japan actually believed to have intervened once again in the last few days. Almost 6 trillion yen is supposed to have been spent by them on intervention. We also have had some data which was not really so market moving. As you said, the retail sales came better than expected, but it was flat month on month. But the thing about retail sales is that it's only the nominal increase, which means that it is based on the current prices and compared to the previous prices. But if you strip out the inflation, the real retail sales are actually down at 2021 peak. So in terms of volume, actually, you are not seeing a big increase in the retail sales. Industrial production and housing data were, of course, definitely better than expected. But they are all second-tier data, which really do not influence the policy. It is the inflation and unemployment, which are weak and that are supporting US policy to be on the softer side going forward. On the on the other side, Eurozone continues to now give more and more softer data. The ZEW economic sentiment was weaker both on the Eurozone Euro region as well as Germany. And the activity level in Germany is definitely seen deteriorating once again. We also had the Chinese data, of course, earlier in the week, which was showing the GDP dropping more than expected. So all these actually kept the risk sentiment in check. Bond yields have been trading at the lower level. There was a good response to the bond issuance yesterday by the Treasury. Also, gold, of course, got a very good push by these developments, Trump's statement, and also economies generally showing some weakness. So it hit an all-time high of 2,480 yesterday. The dollar overall has fallen from its high of 105 of last month to around 103.80, finding some support here. Definitely waiting for more indications on the policy. We have had the rupee also trade close to its peak at 83.60. Quite a good demand, but supply from reported supply from central bank ensured that it did not weaken beyond that. But apart from trade data that showed moderation in the deficit, we also had IMF now revising its forecast of Indian growth from 6.8% previously to 7% up, because of a stronger consumer spending and particularly in the rural segment. So all in all, weaker dollar due to various factors, but whether it builds on it and breaks the the long-held range between 103 and 107 is something that we need to wait and see. Thank you.
Thank you, JK. And of course, I would draw attention to what you just said with respect to Trump markets discounting what Trump is trying to say, while, in the UK, a fully formed government, when they are trying to, when the King's speech happened, it actually did not result in any sort of impact. That's the way markets work, and that's why it's so interesting. US retail sales, it fell and it is showing some, it rose, but when you strip out the inflation, the volume growth is are at 2021 levels. I'm sorry. The Eurozone continues to give softer data. The ZEW survey indicating economic activity is also coming in softer. Gold is trading at all-time highs because of weak economic data across the regions, and of course Trump's wanting more sort of weaker dollar. For rupee, we continue to trade close to the peak of 83.60, while supply from central banks ensure it doesn't weaken any further. And IMF also revised the growth forecast for India from 6.8% to 7%. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.